Hello, everyone. Welcome, guys. Welcome. We'll get started shortly. Welcome, everyone. Welcome. We'll get started shortly. We'll get started shortly, guys. Welcome, everyone. We'll get started shortly. So beginners class, beginners and Q&A class, beginners and Q&A class. Welcome, everyone. We'll get started. Welcome, everyone. Beginners and Q&A. Hey, Betty. Welcome, Betty. Welcome. Hey, Linda. Welcome, Linda. We'll get started shortly. Hey, Darlene. Welcome. Again, we'll get started. All right. Welcome, everyone. Welcome. Welcome, guys. As you guys know, on Saturdays we do our Q&A class, and but focusing on beginning traders. All right. So whether you've been trading for a few weeks, all right, a few months, even a few years, and still trying to figure things out, we'll try to help you guys out here in our beginners class to kind of clarify um, some misconceptions about the markets, and some perhaps give you guys some tools that you can use moving forward in your trading career. All right. We do this class every Saturday, but we also do in the evening classes Sundays through Thursdays. All right. Every week. As new, I know we got some new faces here. So as new traders, I always try to start with any questions that you guys have as new traders entering into trading, right? Any questions, concerns that you guys want me to address as new traders, all right? Now, I've been doing this for over 25 years. All right. So I've worked with all types of traders. All right. I build trading systems with our company, which is called Monster Trading Systems. All right. I do coaching also with traders. Okay. Um, so I've been around a bit. So my goal is to help you with your trading career. All right. So Betty, all right. So Betty has a question here on how to use indicators. So let me make a note here so that I don't forget. Okay, so how to use indicators during the coaching session. Okay, all right. So we'll touch on. I don't know what you mean by coaching session during the coaching sessions. Betty, perhaps you might want to clarify. Hey, Solomon, welcome. All right, but we can go through. Oh, the one-on-one coaching. Okay, all right, all right. We'll touch on that. We don't. Yeah, we'll touch on that. We'll touch on that. Thanks, Betty. Anyone else? Any other? And it doesn't have to be a question, all right, but just information that you guys might want to get for yourself, all right, and be a little selfish, right? So right, so as traders, when we start to trade, right, we're no one is with us, right? We're usually doing this by ourselves, right, in front of our computer with the market. So it's really us against the market. All right. So you want to be a little selfish to get the information that you want. We're all a team, right? But you do need the right information, your information. All right. Hey, darling, you have a question? Welcome.
Yeah, good morning, David.
Good morning.
So I have two questions. So the first one will be, do you have a suggestion of a step by step how to decide like how to evaluate uh a stocks and decide if buying or not, like
Okay.
need like a different step to follow. And secondly, I'm still having some struggle to uh, define my support and resistance eventually, because I don't know how many the period I should take in consideration if I should make the evaluation on I don't know a year period or a month period. This is
Okay.
really confusing. I don't
Okay.
know if you can give us some advice on that.
Okay. Okay. That's a great question. All right. Thanks, darling. That's a great question. We'll go over that. And then we'll talk about time frames also. Yeah, that's a difficult, it's difficult to do, um, finding support and resistance, um, and especially on different time frames. Okay, so and we'll talk about this. That's why we have our support and resistance lines drawn automatically when we use our trading systems. So I'll show you guys that. And the timeframes are important too. All right. So we'll talk about that. Anyone else? Anyone else? Any other questions? And if you guys don't have any now, as we go through this, just stop me. All right. This is your term. This is your opportunity here. All right. We don't have any traders here, any of our traders with vast amount of experience. Okay. So this is your time, your safe space, I call it. All right. To just relax. And all we're gonna do is have a conversation. All right. And the goal is you won't get everything you need today, but keep coming. It's a process, all right, and we want to add layers, right? Layers. I'm going to share my screen here, and, and Betty. Betty has another question. The best time to enter the market, trading hours, all right, from my experience. Okay, so best time, and that will depend on the different market, all right? Um, but there really isn't a best time, right? We can the markets, especially with the forex market, which is and futures, almost a 24-hour market, right? Best time, best time to enter into the market, um, and best time and hours and my experience. I got to write this down, otherwise I'll forget. All right. Okay. So we'll take a look at, um, and we'll use the charting that we do here with our systems. And let's go. I might leave this 1 second here. So Betty, we'll start with your first question. Uh, which is right, how do we use indicators? And I guess how do we, during the one-on-one coaching, when we do the coaching, all right, um, how do we incorporate indicators? So if just correct me if I'm wrong with, you know, just stop me, help me clarify if if I'm not on the right track. But I think I'll be on the right track here. Okay. The first thing we want to know about indicators, all right, Betty and everyone, is that with indicators, all right, there are all types of indicators that are out there, right? You have MACD, stochastics, all right, RSI, right? You have moving averages, all right, and there are tons, Bollinger Bands, tons of indicators that are out there, all right. Most indicators do not work. All right. So during one-on-one coaching, right, we don't spend any time on the indicators. Okay. When we get into the systems, we'll tend to do that, right? We'll spend more time on the indicators that we use. All right. Okay. So if you guys notice here, and we could just as new traders, you want to be very, very careful um, to keep things simple. All right. We want to keep things very, very simple. All right. And Darlene, this will help you too with the question that you had. All right. About the time frames and support and resistance. There are um, two two sets of indicators that you need. All right, only two. All right. If you notice here, we don't have, this is a very simple chart. If you look at most traders, all right, if you go on YouTube and you look at trading charts, and it's very complicated. All right. I mean, there you can barely see your chart because, or your candles, because it's you've got all sorts of indicators on your screen. All right. And it's just not necessary. All right. When we trade, we want to get right down to what's important to identify, and that is the price, or we call the price action, which is the candles here. Okay, so the more information, the more indicators we put on our screen, right? The more, yes, we'll get signals, but we'll get a lot of signals. Every indicator will give you a different set of entries and exits. It's just what it is, right? Some traders will buy on a crossover of a moving average, all right, a breakdown of the moving average, and then you add an RSI. If it's overbought, they will get out. If it's oversold, right, they'll get in, and that's just very, very confusing. All right, very, very confusing. So the first thing to recognize or be aware of indicators is that simple is better, right? So very simple. If it's simple, it's better. Um, uh, Two indicators that we need to have, all right, that we need to have on our screen, all right, moving averages, right, but most importantly, support and resistance. So our support and resistance lines here, these yellow lines, those are our support and resistance lines. So we need support and resistance. All right. So we need support and resistance, and then we need the moving averages here. And I'll show you guys how this works. All right. All right. And so Darlene here, rather than manually, right, right, drawing in your support and resistance lines on a different time frames, right? We have it where, because it's such an important indicator, all right, and you really don't have you really can't, you should not, if you have to draw your support and lines in, there's a really good chance that you're going to get it wrong. All right. And this is important. So we have it where it's drawn in automatically by our systems. Okay. Now, the reason why we do need support and resistance lines is to identify where there is buying and then where is selling. All right. Where there is buying and then when there is selling. So we'll take a look at a few charts here. Okay. During the one-on-one coaching, um, we'll we'll spend a little bit of time on support and resistance, understanding support and resistance. All right, during the one-on-one coaching. All right, we'll spend um, because support and resistance is your foundation. All right, is your foundation, and I'm gonna go back and forth. Might be sound confusing, but you we'll get to the meat of it. Okay. Um, so number one rule, keep it simple. Keep it simple. Two indicators you need, support and resistance, and then your moving averages. All right. We use support and resistance to identify when the buyers are entering the market. All right. And when the sellers are entering the market. All right. So a break of resistance, and you guys write this down. If you've heard it before, write it again. All right, we're gonna buy when the price breaks resistance. So we need our resistance lines. And I'll show you, Darlene, how to draw in those lines. All right, so we need a break of resistance. Right here was a break of resistance to show that buyers are entering the market. Green candles will show that buyers are now entering the market. Break of resistance here, break of support here. Red candles, we know sellers are entering the market. Okay. We need the other indicator that we need is support and resistance. I'm sorry, the moving averages. So we need support and resistance and then the moving averages. Now, as traders, you can do whatever you want. As new traders, you can do, there are traders that have tons of indicators on their chart and they're successful, right? There are traders, very few though, but I've seen traders without any indicator. They don't even have support and resistance on their charts, okay, or moving average, and they do well also, okay. Um, what we want to do is give you the tools that you do need, all right, but just what you need. So not too much, nothing at all, just what you need. All right. The moving averages, like here, we use the moving averages um, to clarify or give clarity, right, to the direction of the buyers and sellers. Okay, so think of it as a road, right? This is, and I like to use that analogy that it's your moving average here. We use it for separation, right? We don't have a crossover moving average, right? So we just use it for separation for buyers and sellers. All right, so let me explain. So just for separation, the indicators that you use on your charts, all right, has to make sense. There's a very specific purpose. It has to be, right? Because when we're trading, we need to be specific, right? We need to be almost robotic in our trading, right? And the fewer decisions we have to make, the better, because the market's moving so fast, right? And a lot of the work that we have to do in the one-on-one coaching is on your mindset. Okay, so Betty, yes, we'll go over some of the, how to use the indicators, right? We'll use, how to use them effectively. Just because you have a moving average and a support and resistance line on your chart doesn't mean we know how to use those, all right, effectively and really benefit from those benefits. We still have a lot of work to do. So yes, we'll talk about the importance of support and resistance and keeping the indicators to a minimum. But we also we do a lot of work on your mindset. All right. And then on the time frames too, right? We do a lot of work on the time frames, using the right time frame. Okay. Every market, there's a better time frame to trade that market. But as an individual, right? We need to trade the time frame that works for us. Okay. And we'll talk more about that. All right. But if you guys look here, this green line and this red line here, all right, never crosses over like most moving averages. Okay. It's all a separation. All we want is separation so that we can visually see, and all our systems work on that same principle. We can see, let me change this here, clearly, right, whether when the buyers are in control and then when the sellers are in control. And we want to keep it simple. There shouldn't be any, we don't want a lot of confusion. All right. And guys, as I go through, just stop me, ask me any questions as I go through this. Okay. So if the price breaks resistance, here's our resistance line here, this yellow line, and that came in automatically when the price broke resistance. All right. So just remember, when the price breaks resistance, buyers are in control. So we need to be buying. When the price breaks support, sellers are in control. So we should be selling. I'm going to, let's get a better chart so that there isn't any confusion. Hold on. Any questions so far? Any questions so far? All right. So Betty says, which EMA do you suggest we use on the time frames 1 hour, 4 hour? It shouldn't matter. The time frame, Yeah, I guess it does matter which time frame. 1 second here. Um, let's hold on 1 second. Let's find. All right. Okay. This is a better. Okay. Um, as far as um the time frames, okay. You have to play with the moving averages, the settings. We use let's see here. We use 34 here, but again, we use it's this is all proprietary, and we use a totally different. We use the moving average a different way. Okay, if you brought in, let's say you move, and you just have to play with it. Everyone uses the moving averages differently. Okay. Um, so let's go here. All right. So here's a two-line moving average. So here's a two. I know it's probably hard to see. Here's a two-line moving average here. Input. We can do, here's the fast moving average and then the slow moving average. One is 9 and one is 18. Okay. So on your system, if you're using TradingView or whatever, system you're on, you can change the moving average. Like I said, we use we use 34, but that looks very, very different. If you guys look here, I know it's hard to see. Hold on. You say here, this moving average here, see our moving average here, we have clearly defined separation. All right. So look at this as a road. So when the price, right, our moving average never crosses. All right. This moving average here, the one I just inputted, right, it crossed over here, crossed over. All right, crossed over here, crossed over here. All right, crossed over here, crossed over here. All right, it crossed over here, moving average crossed over here. Usually when that moving average gives crosses over, that's our entries, right? Right, crossed over here, crossed over here, crossed over here, and crossed over here. That's typical of a moving average. So we want to be very, very careful. So we would have had to make a decision here to enter or exit. Had to have made a decision here to enter or exit. Had to have made a decision here to enter or exit. Had to have made a decision here to enter or exit. Had to have made a decision here to enter and exit, right? Had to make a decision here, had to make a decision here. All right. So 1, 2, 3, 4, 5, 6, 7 decisions that we would have to make. All right. Because that moving average crossover. So we use that moving average, right, as an indication to either buy or sell, right? These are all false readings. All right. If you notice here, our moving average never crossed over, never crossed over, never crossed over, never crossed over, right? That green and that red here, never crossed over, never crossed over, never crossed over. The price crossed over, but our moving average never crossed over. Okay. So I hope that answers your question. Our moving average is a steadfast moving average, right? Never crosses over, okay? And the reason is we don't need it to cross over, right? We don't need it to cross over, right? Okay, so let's remove this moving average now. All we want to show our moving average. Now, I know everyone is different, right? All right. All right. You're welcome, Betty. All right. All right. So everything has its purpose. So remember, the moving average is just supposed to be the way we use it is for price separation. All right. So we want to know where the buyers are. Buyers in control of price, or the sellers in control of price? Are the buyers in control of price, or the sellers are in control of price? Okay, we're not using the moving average, right, to tell us when to enter or when to exit, right? The best way to use to know when buyers are in control, getting into the market, and when sellers are getting into control, all right, getting out of the market, is through support and resistance. It's the best way. All right. All right. It's the best way. Any really good trader, right, uses support and resistance. And that is your foundation. All right. So all your entries, all your exits will come through, all right, support and resistance. So we don't need the moving average to give us, right, additional signals. So remember that. As we add on, bring on indicators, those indicators will provide signals. And most of those signals is buy and sell. We don't need that, right? We already have the best known signal, which is using our support and resistance, right? Lines. Okay. So moving average is only for separation. All right. So green candles, right? When the price action is above this moving average here, this green line, all right, we know buyers are in control of price. When the candle is below the red line, right? Below the red line right here, we know sellers are in control of price. So when the price breaks resistance, price stays above, candle stays above the moving averages, all right? We know that buyers are in control. When the price gets between, and I call this the road here. Look here for a second. Okay, for a second. This is your road right between here. Right here. We want the price to stay right above or below. We don't want the price to get in, right, in between your road here. So you right here, driving along, right? Once that price gets in that road, right, like right here, just know that, okay, right now we have no one is in control. Right here, no one is in control. Right here, no one is in control. Okay. Once the buyers, all right, and we can look at this visually. So right, once the price stays above that moving average, and we color code it so that it's green, we know buyers are in control. Is in control. Buyers are in control. Buyers are not in control. Buyers are in control. Buyers are in control. Buyers are not in control. Buyers are in control. Buyers are in control. Buyers are not in control. And what that does, it keeps us keeps our emotions in check, all right? Keeps us in the trade, all right? Keeps us from making mistakes, all right? And getting out early, all right? Now, when the price breaks down here, and follow me. All right, once the price breaks below right here, see here, all along here, the candles are not below this red moving average. Remember, all we want is separation. So buyers are not in control. Buyers are in control. Sellers are not in control. Here, the sellers try to get in control, but then guess what? Reversed, confusion, a lot of confusion in here. White, green, red candles. Now buyers are back in control. Right here, no one is in control. White candle, indecision. All right, neutral. Green candles, buyers are now back in control. Now, I'm going to ask, here's that moving average, like right here. Who is in control now of price? Anyone? Who is in control right now of price? Anyone?
Sellers.
Sellers, very good, Betty. Sellers are in control. Okay, so we can visually see now that, okay, sellers are in control. Okay, buyers are in control here. And that's all trading is, right? All we have to do is identify buyers are in control here. Buyers are in control, buyers are in control, buyers are in control. Here, the buyers, we don't know if buyers or sellers yet, right? Indecision here, all right? Indecision here. Sellers try to take over, get control. Buyers took control again. And our job is just identifying when the buyers are in control, all right, and then get on the trade. That's all. That's our only job. It doesn't matter what we trade, right? Our job is to identify, okay, buyers are in control, buyers are in control, buyers are in control, buyers are in control. Wait, okay, buyers are in control. We need to buy. Wait, buyers are in control. We need to buy. Now, sellers are in control. Sellers are in control. We need to sell, get out, or go short. That's it. So whatever indicators we put together has to be clear, has to be simple, has to be clear. Okay? All right. And the reason is, right, this needs to be 10% of your work. 10% of the work that we do as traders. All right, if you're spending 90%, right, of your work here, right, you're not going to have a lot of success because we need 90% of your time focused on your mindset and execution. This process here, this whole process here, all right, you should only spend 10% of that on that. This whole process here should be in place, should be systematic. You should always know, okay, I'm going to buy here, price breaks resistance. I'm going to sell when it breaks support. I'm going to buy when the price breaks resistance. I'm going to sell when the price breaks support. I'm going to buy when the buyers are buying, sell when the sellers are selling. And that should only take 10%. If you're spending 90% here trying to figure it out, right? Boy, all right? So we need that 90% to work on your mindset, all right? Just on trading. Trading meaning just mindset, building higher trades, getting to higher levels of trading and making money. All right? This should be a given here. Okay? That's why it needs to be kept simple. If we have to go back and forth, back and forth, back and forth, right? Looking at several indicators, looking at multiple time frames, looking at drawing out support and resistance lines, guess what? We're going to have a very difficult time, right? Can you make money? Absolutely, but it could be a bit more difficult. Okay. All right. I hope that helped. All right. So simple indicators, right? We don't need indicators all of our charts like here. I see so many charts like here. I mean, you can barely see your price. You can barely see your price lines because there are indicators all over the place. A lot of confusion. I'm not saying it can't be done, all right? But it just makes it very, very difficult, okay? All right, so simple moving average, right? The average, we need a moving, we don't need moving average that does this, and then, you know, it's crossing over like this, because every time it does that, that's a signal, all right? So we could be in the trade really well. This trade here, we bought here, and we sold here, all right? But we could have exited here, like most systems, exited here, all right? Exited here, right here. Most processes, right, is going to give you multiple entries and exit, and there should be only one. We're going to buy when the buyers are buying a break of resistance. We're going to sell when the price breaks support. We're going to buy when the price breaks resistance. We're going to sell when the price breaks support. And the color-coded candles is just to help us visualize, see green candles, buyers, green moving average, buyers, red candles, sellers, red moving average, sellers, okay? Our system give a buy signal here to buy. Blue arrow, we buy. Red arrow, we sell. Blue arrow, we buy. Red arrow, we sell, okay? All right, very good. Now, time frames. Let's talk about time frames. All right. Most of the charting you guys will notice that's out there. If you're gonna do charting, you might, you know, you want to do like certainly recommend our system, but if you want to do it on your own, you can do trading view, but you want a time, a lot of, you know, you're going on your phone, it's gonna have a daily time frame. It's not the same. All right. So when we look at time frames, so I'm gonna bring out a 60-minute time frame. So just keep in mind, right? And write this down. Every time frame, right? The traders are watching the time frame. Traders watch the time frames. Okay. Traders will watch the time frames and make decisions based on time frames. All right. So the most popular, well, let's start with this. The time frame that traders use most often is a 5-minute time frame. Okay. So Darlene, all right, 5-minute time frame, all right, is popular. Okay. The next time frame that traders like is a 15-minute time frame. All right, they'll use a 15-minute time frame. Now it's not as popular as a 5-minute, but a 15-minute time frame here. So I can just select the different time frame. That's a 15-minute time frame. And traders will use a 30-minute time frame also. All right, so 5, 15, 30. The most popular time frame for trading is the 60-minute time frame or the 1-hour time frame. All right, so the 60-minute or the 1-hour time frame. All right, the next most popular time frame that traders use and watch, and the reason why we need these set time frames is because traders are watching these time frames. They're making decisions on this time frame. So we need to watch those decisions and those time frames so that we can make decisions, because most often that's when the price will break your resistance levels or your support levels. All right. The next popular time frame is the 240-minute time frame. All right. So the 240-minute time frame, or we call that the 4H. or H4 for the 4-hour time frame, 240-minute or the 4-hour time frame. All right. So the most popular, I would say 5 minutes is very popular, but most popular 60 minutes, 1 hour, 240. All right. And then last but not least, the daily time frame, daily time frame. All right. So the daily time frame, very popular. All right. Now, every candle here on the daily time frame, the way you know that you're doing it right, okay, is you need to know that, because just because it says a daily doesn't mean that we're trading on a daily time frame. There are charts out there that will show daily, say daily, doesn't mean every candle is a day's worth of data. Okay, go ahead, darling, you have a question.
Yes, thank you. So, what is the difference between the time frame, the daily, the minute, and the I don't know, and the interval of the time you on your for instance on your screen we can see from October to July.
Mm-hmm.
How do we call this interval of time from October to July?
Okay, so the interval, good question, or the interval. Okay, so when you look at your time frames, forget about what's down here. Forget about this, because I know what you're thinking, right? The day, when you look at the daily time frame, right? What we're thinking about this right here, right? The time down here. All right. The time frame has to do with the candle.
Yeah, I know the candle and the time frame, but what is is there any name to define if I want to study this my candle on a monthly period or a yearly period or a 5-year period?
No, you don't need to do that. No, you don't need to do that. Yeah. So now you can look at history, right? You can look at you can look at the history, but that doesn't tell you a lot, right? We can look at near-term history just for support and resistance. Okay. But really taking a look at what it's done on a weekly, yearly, that's good. But your entries, right, we'll focus on here. Okay. Now the important thing to know here is that every candle here, is 1 day's worth of data. So from open to close, it took a day. Okay, so let's say and you mentioned stocks, right? So let's say for the stock market, equity markets, the market opened. The market opened here, and closed here. All right. So it opened at 6.94, and then it closed at 6.9. Open at 6.90, and then closed. No, it opened 6.90, made a high 6.95, made a low 6.89, and then closed at 6.94. So the important thing to know here is this candle represents the trading data for the day, for just that day. All right, for just that day. And then this was the next day here, then the next day, then the next day. The reason why this is important to know is that your buy and your sell will come in on this candle. So when we have a day's worth of data, when we trade on a daily time frame, that's why we say when we trade on a daily time frame, right? We analyze data every day. Okay. So just remember that when we hey Cedric, welcome Cedric. When we trade on a daily time frame, our trading decision whether to buy and sell has to come in at the end of the day.
Okay.
Okay. Now, when we do a 4-hour time frame, our buying and selling has to come in or will come in. All right. Let me change this to a 4-hour time frame. So our buying and selling has to come in every 4 hours. So this 240-minute candle, all right? So just think every 4 hours, right? It's going to give us, not that we will have a signal, but we could possibly get a signal, right? After that candle opens or close. So on a daily time frame, once a day, right? On a 4-hour time frame, once every 4 hours. On a 60-minute time frame, this is the way we want to look at the time frame. On a 60-minute, right, time frame, on a 1 hour time frame, or a buy and sell, okay, could come in, right, every hour or on the hour. All right. On a 30-minute time frame, every 30 minutes. Okay, or on a 30-minute, all right, on a 5-minute time frame, all right, 5 minutes. So when that candle closes, every 5 minutes, we could get a buy and sell signal. Okay, so when we look at, and then write this down, anything under a 60-minute time frame, so 30-minute, 15-minute, 5-minute time frame, there are even traders that trade on a 1-minute time frame, which is crazy, right? All right, we call that intraday trading or day trading or scalping. All right, so anything that is under 60 minutes, under a 1 hour time frame, all right, you're either scalping, day trading, or intraday trading. And there are other terms out there for that. What that means, darling, and everyone else, is that we are going to enter and exit within the day. So within the day, and so just know that when we trade, so right here, right, we got in here at 7:30, 7 o'clock, 7:30 right here. We sold here around what, 1, 2 o'clock. So this trade here only stayed within the day on a 5-minute time frame. As we increase the time frame from a 15 minutes to a 30 to a 60-minute time frame, that allows us to stay in the trade much longer when we catch a trend. All right. So anything under, I would say 60 minutes, 30, 15, 5 minutes, 1 minute, we're looking to trade intraday. Get in, get out within the day. And that's important because if you're trading on a small time frame like that, right, you have to be literally glued to your trades. All right, because remember, every 5 minutes you might have to make a decision to get in and out of the trade. Doesn't mean you will, but you might have to make a decision to either get in, get out of the trade every 5 minutes. If you bring it down to a 1 minute time frame, here, every 1 minute, every minute, you might have to make a decision. All right. So think about that. You have to be available to make a decision. All right. Not that you will, but you might have to make a decision every 1 minute. Here was one here on a 1 minute time frame. So price broke resistance. We had a buy signal here on 1 minute. All right. And then what's this? 1, 2, 3, 4. Another 5 minutes later, here price broke support. We had to exit, and it's that quick. As we increase the time frame, it allows us to stay in the trade longer, but it gives us more time to be away from the screen, right? To have a life. Okay. So remember, anything under 60-minute time frame, we are day trading, intraday trading. All right. Scalping the markets. Anything over a 60-minute time frame, so 60-minute and above, so your 1 hour time frame, all right, 1 hour time frame, you're going to be swing trading. All right. And that's what you want to do. You want to get to the point where you're doing some swing trading, and we'll get into position trading. All right. So 60-minute 240. All right. Not a 2-hour time frame, not a 3-hour time frame. 60-minute 240. All right. So a 1-hour time frame or a 4-hour time frame. We don't just make up time frames because we want a different time frames. We want to use the time frames that are most popular with other traders. Because when we draw in, darling, our support and resistance lines, right, we're going to see where they're buying and then when they're selling, right? All we're doing is we're piggybacking on their trade. So we need very defined time frames. Okay. So a 60-minute time frame, a 240-minute time frame, or 4-hour time frame, that's swing trading. Swing trading. Okay. So rather than getting in and out for that day, intraday trading with a swing trade, right? We might stay in that trade. So here was a buy signal here, all right, on the 1-hour time frame, which came in on 6/11. We got a sell signal to get out on 6/13. All right. So it wasn't intraday within the day. This was what? 2 days, 3 days, right? All right. As we increase that time frame from a 60-minute time frame and we move it to a 4-hour time frame. All right. So 4-hour or 240 time frame, we can stay in that trade longer. Okay. We can stay in that trade longer. Not only can we stay in the trade longer, but we can also have the time, right? We're not, most of you guys are not full-time traders. You have your work to do. You have careers, you have jobs, right? So you can't stay in front of your computer throughout the day watching trades, right? We're not full-time traders. You guys are not full-time traders. So we can trade on a 1 minute, a 5 minute, a 15 minute. Okay. As you move that time frame up to a 240-minute time frame, it gives you more time. It does two things. Gives you more time to stay in that trade for maximum profit. Okay. And it also allows you to perhaps watch the trade every 4 hours. Most of you will watch it more than that, but you know that you don't have to make a decision, right, until once every 4 hours. Okay. So it gives you more time. All right. All right. So here, as an example, the buy signal came in on 5/11. The sell signal came in on 6. So 5/11 on 6/2. That's 2 weeks. So rather than having to make a decision, right, or get in and out intraday, here we had 2 weeks where the trade ran. This one here, right, buy signal came in at 6/6. All right, exit was 6:15. All right, so that's about a week. Now, so hourly time frame or 60-minute time frame, 240 time frame or 4-hour time frame, swing trading. All right. When you do your coaching, we give you guys some books on the swing. You get some manuals with us, books with us, and one of the books is swing trading. That's what we do the most of. Okay. A lot of our systems are based on that. The next one, all right, which is called a position trading. Position trading is we trade on the daily time frame. So every candle is a day's worth of data. All right. So at the end of the day, we'll know either do we stay in or do we get out. All right. Now, with a position trade, we are basically taking a position. All right. We are taking a position. These trades here will last longer. They're rather than, so intraday within the day, Swing trading will last about a few days to a week. If we are lucky, we could get a couple of months out of it. All right. With a position trade, right? Here's an example here. We bought here on 7/15. We got out here on 11/4. All right. So that's about 4 months. 4 months in the trade. So on a daily time frame position trading, just know, right? You're gonna stay in that trade much longer. All right, much longer. All right. What's good to do is you can incorporate several of these. Okay. So there are traders that say, well, I'm a day trader, or I'm a swing trader, or I am a position trader. All right. You know, when we trade, we are just traders. We just trade, right? So it's really what the market gives us. So we can move from different time frames, meaning that we can have stocks in our stock boss. So you mentioned stocks, right? Identifying the different time frame for stocks. Stocks will usually, so if we go here, hold on. Let me move this back so I don't. Stocks will usually take longer to move. All right. Stocks are usually slower, so they take longer. All right. So which time frame would we use on that? Anyone? If stocks are slower, all right, and they take longer to become profitable, which time frame would you guys think we would use?
Daily.
The daily. Very good, Solomon. The daily. So here in our stock system, stock boss and bullmaster systems, we use a daily time frame. Okay. So the time frame, we can use the time frame so to help us with managing our time. Okay. We can also use the time frame for different markets. So different markets move faster, right, and slower than others. So stocks, we like the daily time frame because, right, we need to give the stocks time to move because it takes much longer. Forex is fast, but it's not as fast, right? So Forex here, right? Forex, we have a 240-minute time frame. Okay, so it's fast, but it's not as fast as futures. All right, but it's not as slow as stock. So it's somewhere in the middle. All right, so we can use a 240-minute time frame. All right, that gives us enough time to really take some profit. All right, really get into the trade, but it still allows us some time to, some personal time so that we don't have to be in front of it all the time. All right, compared to here, where we have a futures system. All right, 1 second here. So the futures will move faster, right? Futures are perhaps the fastest moving market. All right, and with that market, then we might need to get out. We need a faster mechanism, all right, to get us out of that trade. Okay, so here, right, we use a 60-minute time frame. All right, so we use the daily here to find the direction, but our trading window, right, is here. So it's not quite intraday, but we're really on that border, right? If we move that from a 60 to a 30-minute, now we're intraday. Okay, so we're in a swing, but we're right there on that border. Okay, if markets are moving really, really fast, we might want to reduce that time frame for a 60, all right, to a 30. Or if we want to time our exit, right? We want to time our exit out of that trade. We might even move it from a 5-minute, right? So we might enter on a 60, market's really moving. We're looking for an exit. We might want to move that time frame down to a 5-minute to kind of fine tune our exits. Okay, that makes sense. If it doesn't, that's okay, right? That's okay. Just know that that's the process and we need to learn that process. All right. So Betty says, is it possible to buy and sell directly on StockBoss or Bullmaster platform? Or do you need to use a broker? Okay, so good question. On on StockBoss, and so let's bring up StockBoss here. Everything we run here, we have all the systems are down here. We have 19 systems, and we're creating we're always creating more systems for the different markets and to give us more opportunities. Everything is run on TradeStation right here. Okay. So the indicators that we use here, the moving average, all right, the candles here, most importantly, Darlene, the support and resistance lines. Let me touch on this because you wanted to find out. As you move, your question was, right, drawing, it's hard to draw your support and resistance lines. And then on multiple time frame, it is very difficult to do. It is very, very difficult to do. Okay. As you look at, as you go through this on a daily time frame, support and resistance will be different on a daily time frame. It will be different on a 60-minute time frame. It will be different on a forward time frame. It'll be different on a 5-minute time frame. Every time frame, okay, it's your support and resistance will come in at a different time. Okay, just remember the way we draw support and resistance is we need the price to come up and touch that area a minimum of twice, like here, touched here, basically touched here. Now we have resistance, touched here, touched here, touched here. Basically, we have support. So here is support, here is resistance. All right, so you're gonna have to draw in your lines, okay? But you need a minimum of 2 touches, all right? To have resistance, 1 will not do it. 1 is just a high, right here, that's just a high, all right? But you need price to flatten out, all right? To have support, flatten out, to have resistance. So as you go through, this is why this is important. That's why a lot of traders can't do this, right? Because you have to go along with price in real time and draw in your support and resistance lines. And then you have to wait for the price to now break resistance. We know buyers are now coming in to buy. All right, then we have to draw in all along, draw in support and resistance lines so that we know when the sellers could come in, when the price breaks support. And you have to do that for every time frame you trade. It's very difficult. It's a lot of work. All right. That's why because when you trade, there's a lot going on. So that's why we need trading systems, right? Monster trading systems to provide a lot of the heavy lifting, right? All of this is heavy lifting, so we can now focus on just trading and execution. Okay? Trading and execution. All right. Now, everything is built on the TradeStation platform. Okay. Can you trade off TradeStation? Yes. There is data. Most of our traders do not trade off the TradeStation platform. They have their own platform, whether it's, Robinhood, whether it's forex.com, Fidelity. All right. You have the freedom and flexibility to trade off any platform. However, we run the system, all our systems are ran on the TradeStation platform. Okay. Forex, we do forex.com, Hugo's Way. All right. So you can use any broker that you have to trade out of, but all of your I wouldn't call it research because we're not doing any research. We're just looking for our signals to enter and exit. Okay. So yes, Betty, you can use any brokerage account. Okay. But all of the systems will run on the TradeStation platform. We have some traders have one system. Solomon is on here. Some of our traders have multiple systems like Solomon. Okay, have multiple systems, and they will all do the same thing. All right. They will all buy on a break of resistance, sell on a break of support. All right. We don't have multiple indicators on the screen. Very, very simple. We just need to identify the buyers and identify the sellers. All right. Is it still difficult? Yes, trading is difficult. It is difficult, but this makes it a lot easier. All right. It makes it so much easier where we don't have to manually draw in our support and resistance lines. We can identify the buyers clearly. All right. And then we can identify the sellers clearly. Okay. All right. I think we've gone over 12 minutes over. All right. Did this help? Betty, Darlene, did I answer your questions, guys?
Yeah, this was a very good class, David.
Okay, very good, Betty. Very good. Very good.
Thank you
Very
so
good.
much for your time.
Darlene, did you get any
Yeah.
help from this?
Yeah, definitely. Thank you so much.
You're welcome. You're welcome. So the indicators, keep them simple. Just keep a very, or the goal is this, right? We don't need to be experts charters at charting, right? All we need to know is our only goal is identify, okay, are the big institutions, traders, hedge funds, are they buying now? All right, that's it. Are they buying now? We'll know that they're buying now when the price breaks resistance, so we need to buy. We don't need to think about it, just buy. All right, when the price breaks support, we'll know, all right, right here, and we know what sellers are coming into the market, all right, or sellers are short, short sellers are entering the market, or traders are getting out. So then we need to get out. That's it. That's it. It took a long time to get to the point where our traders trusted this process. All right. And Solomon, we were talking yesterday, he mentioned that, right? When he first started, that it was difficult trusting this process. Okay, most of our traders have a difficult time trusting this because it's just so simple, right? And everyone, it's taught out there that it needs to be fancy, and you need a lot of data, a lot of information, right? You don't. We just need to keep it simple, right? Right? Up, down, up, down. And we just need to identify, okay, what's going up? We need to go up with it. What's going down? We need to either short it and get out. And then the time frames, the different time frames are important. All right. So it doesn't matter what we want. Obviously, is when the market is ready to move. But right, if we have a full-time job, like most of you will have a full-time job as new traders, you haven't gotten to the point where you're trading full-time, right? You don't have the time to trade on a 5-minute time frame, a 30-minute time frame, even a 60-minute time frame. All right, you just don't have the time to execute that quickly. All right, most of you as traders will trade on a 240 time frame, and you'll still have an opportunity to do well on the 240 or even the daily time frame. Okay, but then there's certain markets that move slower, right? That we need to push it out, right? There are even traders that trade on a weekly time frame, believe it or not, right? Where they just want once a week. They're so busy. They're like, okay, Dave, once a week. I just have once a week to watch it. I can't even do it once a day, once a week. And we've got to move them to a weekly time frame. All right. But very few traders trade on a monthly time frame. Now we can use the monthly to just look at the overall big trend. Okay. So very good, very good. And these are the beginners class. So, good questions, guys. If you need coaching, right? If you need coaching, just go on the website, all right? Or just contact me directly, all right? The coaching is not expensive. It's relatively inexpensive, okay? But that is some of the work we do. So Betty, yes, we'll talk about indicators, but we'll talk about in the coaching, we talk about your schedule, how much time you have dedicated um, to trading. We don't want to change your lifestyle for trading. That's impossible. You will not last long if you're changing your whole life to trade. You won't last long as a trader. We want trading to be a complement to your lifestyle, right? So you have your life, right? And the one thing we can do really well to complement, have trading be a complement to your lifestyle is through the time frames. So we want to look at what your schedule is now, and then we'll try to fit in. It's not going to be a perfect fit, but we can get it really close where now trading complements your lifestyle. Okay. All right. So that you last long in trading. Okay. The goal in trading is to last. Right. It's not a get rich quick overnight. Right. The goal is to last. As you're with us longer, right, you become better. And the better you will become, the more success we have. Right. And success in trading equates to, obviously learning, but also making money. So we can take the time frames. Okay, so Darlene, the time frames, the way we want to look at it, we can take that time frame and develop a time frame and market around you. That's what we do well with the coaching. All right, so we can look at you and say, okay, what's your day like? What's your week like? What even your year is like? What are some of the goals you have? All right, and we can find a market for you. Some traders, they come in thinking, we have a lot of traders come in thinking, hey, Bitcoin, right? I can go name trader after trader where they came in, they thought Bitcoin would be the market. All right. And they come in, we do some work through the coaching, and guess what? They're trading forex or they're trading futures, and they really love it, right? And they're making money, they're doing well. All right. We have some traders say, hey, I want to trade futures, and we've got to move them to stocks because of their work schedule. They just do not have the time to watch the futures market because it moves fast. Okay. So that's some of the work that we do. All right. All right, guys. Any other questions before we leave? Any other questions? All right, no questions. Okay, thanks for coming. Keep coming back. Betty, I'm so proud of you. Betty is on here every time. All right, Solomon too. Guys, keep coming back. Keep coming back. This is how you get this information, this knowledge. And let me tell you, when you get this knowledge and then you put it together, all right, you'll do well. We have traders. Solomon is on here. He's doing well. All right. And we have other traders that do really, 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 really well. But you have to come and you have to keep coming because every time you hear things a little differently and everyone learns differently. Everyone learns differently. Okay. All right. So we'll have and then the weekly, nightly classes where we go through, and Betty's on here all the time, and Solomon, right? Where we go through each system and the markets every evening, and we go through the different systems and we look for picks, and how we look for picks, how we find opportunities. It's a good way to learn. All right. So you won't have me one-on-one like kind of like this, like we're doing now, right? Because we just going through the markets, going through opportunities, but that's how you learn. All right. So if you decide, you go through that process, by the time you do decide, if you decide to trade with us and use a system, it just makes it so much easier, right? So much easier. It's amazing what the mind will do, right? In the background, just soaking up that information. Okay. All right. Okay. All right, guys. Have a great rest of the weekend. Okay. And I will see everyone tomorrow, Sunday, for our evening class. Good job. Good questions, guys. Good questions. All right. All right. Take care. See you guys. Take care. Bye-bye.
Bye, David.
Bye-bye, guys.